Hello guys, how's it going? Welcome on another price action video on the arc. And if you're unable to understand how I explained dynamic channel on the previous video, I hope you'll be able to understand it on this on up movement, on the bullish movement, bullish market explanation I'm going to be giving it to you guys. So uh, without wasting much time, I'm going to be going into the same explanation I explained in the previous video. So remember, I told you guys that you need just four touches. You need one, two, one, two for you to get a breakout. You're going to be getting a breakout out of after you get this, after you confirm this four touches in the trend line. And for an up movement, you want to focus on the upside. Then for a downward movement, you want to focus on the downside. You want to focus on the downside. Make sure this trend line on the downside is being respected, and on the upward movements, make sure the trend line at the upside is being respected, because you might get this fake outs in the market. You get, I told you guys about this fake outs that normally happens, that you see up close candlestick, or you see you see the market leaving huge candlestick wicks coming back into the dynamic channel. So let's now get back into it. So we have the first touch, it comes down, it creates the second touch, it comes here, creates the third touch, but this touch is not touching the trend line. It said it did not come to this trend line right here. So this price level has turned a potential two things, like I'll call it a potential resistance, and I'll also call it a potential liquidity level. The market was not able to push to this price level or take out this high. It dropped down, bounced around the trend line, and you can see double bottom forming at that price level. You can see a double bottom forming at that price level, and the market was able to like break out properly. But let's now put it like this, that the market came all the way up here, get this first two third touch, and bounce back to this price level and was able to like break out. Are you getting it? I just, like I told you guys on the first video, this is for educational sake. It's not always going to be like this on the forex markets, but it's just for you to understand price action. So the market comes back to this price level on the trend line, bounce around the trend line, respects the trend line, maybe having a fake breakout. You get, comes back into the trend line, into the dynamic channel, and do a fake out. So in most cases, if it does a fake out, as the market is going up, it does a fake out to the upside, manipulating traders into thinking the market wants to start buying. There's a high chance or high probability that the market will break out properly to the downside. Are you getting it? So we have this buy pressure to the upside that causes a fake out in the market. It grabs liquidity right here. The market pushes up, grab liquidity, and just understand that the market is doing all of this stuff, is grabbing liquidity. This is equal highs right here. Liquidity grab, or let's say it came here, grabs liquidity, goes up, it comes to this price level. So the main price action right now is for you to catch this movement, catch this sell to the downside, because if it's doing all of this, you might not be able to catch all of this movement. You might be able to catch the sell to the downside. So remember that I told you guys that this is a resistance level. This place has turned resistance. And price comes here, bounce off it, but was not able to get to this price level to form its own double top. You get it? The market comes to this price level one more time, tries to break below it, but was not able to do so and push up properly. Maybe it taps into another block, or a 15 minutes or a 5 minutes other block, and was able to break below it. So you might take your entry from here. You might take your entry from here. You can take your entry from here. You can enter trades from here as a smart trader. Enter trades from here. But let's say you miss all of this trade entry and you're able to catch this one, but you're unable to catch this, or you're not able to catch this one, and the market finally break out. So resist support right now will now turn resistance for you. So you want to take your entry from here. So just take note that what is more important in a dynamic channel is the touches. First, second, first, second. Just four touches in a dynamic channel. Most traders will say it's supposed to be three. Yes, in most cases, it's always going to be three. You get it? But if you miss, or you don't know when the market has formed these first touches, you might not be able to know when it formed the third one. Are you getting it? You might not be able to know. But if you like, you open your chart, you want to know if it has touched the trend line up to like one or two times at the upside, one or two times at the downside, you'll be able to know the market next movement and see where price is currently at. So knowing this is going to elevate your trading strategy, is going to help you trade up differently from the way a lot of traders trade out there. So understand that price action, liquidity is very, very important. So price action around key levels is very, very important, and always try to make your trading decisions around these key levels. So that is it on the dynamic channel. I hope you guys are able to understand it. If you have more questions you would love to ask, please leave your comments questions in the comment section.